In the vast landscape of the financial markets, stock market indices stand as crucial barometers of economic health and investor sentiment. These indices serve as benchmarks for evaluating the performance of various sectors, industries, and economies. Understanding stock market indices is essential for investors, as they provide valuable insights into market trends, volatility, and investment opportunities. In this comprehensive guide, we'll delve into the intricacies of stock market indices, exploring their purpose, construction, types, and significance in the world of investing. 1. Purpose of stock market indices. Stock market indices play a pivotal role in the financial markets by measuring the performance of a specific group of stocks, or the overall market. They serve as reference points for investors, allowing them to gauge the relative performance of their investments against the benchmark. Indices also provide valuable information about market trends, investor sentiment, and economic conditions. Moreover, they serve as the basis for various financial products, including index funds, exchange-traded funds, ETFs, and derivatives. 2. Construction of stock market indices. Stock market indices are constructed using various methodologies, depending on their objectives and the stocks they represent. The most common method is market capitalization weighting, where the weight of each stock in the index is determined by its market capitalization, the total value of its outstanding shares. Other methods include price weighting, where stocks are weighted based on their price per share, and equal weighting, where each stock has the same weight regardless of its market capitalization. Index providers use predefined rules and criteria to select and maintain the constituents of an index, ensuring transparency and objectivity in the index construction process. 3. Types of stock market indices. Stock market indices come in various shapes and sizes, catering to different segments of the market and investor preferences. Broad market indices, such as the S&P 500 and the Dow Jones Industrial Average, DJI, represent large-cap stocks and provide a snapshot of the overall market performance. Sector indices focus on specific industries or sectors, such as technology, healthcare, or energy, allowing investors to track the performance of particular segments of the economy. Global indices cover multiple countries and regions, providing insights into global market trends and economic conditions. Additionally, there are specialized indices that track factors such as dividend yield, volatility, or sustainability criteria. 4. Significance of stock market indices. Stock market indices hold significant importance for investors, financial institutions, and policymakers alike. For investors, indices serve as benchmarks for evaluating the performance of their portfolios and making informed investment decisions. They provide a point of reference for assessing risk-adjusted returns and comparing investment strategies. Financial institutions use indices as underlying assets for creating investment products such as index funds and ETFs, allowing investors to gain exposure to a diversified portfolio of stocks with minimal costs. Policymakers and economists analyze stock market indices to monitor economic conditions, assess market stability, and formulate monetary and fiscal policies. 5. Impact of stock market indices on investing. Stock market indices exert a profound influence on the behavior of investors and the broader financial markets. Changes in index composition, such as additions or deletions of stocks, can lead to significant price movements as investors adjust their portfolios to reflect the new constituents. Index rebalancing events, where the weights of stocks in an index are adjusted, can also impact market volatility and trading activity. Moreover, the performance of stock market indices can influence investor sentiment, and overall market direction. As such, understanding stock market indices is crucial for investors to navigate the complex dynamics of the financial markets effectively. Conclusion. Stock market indices serve as vital tools for investors, providing insights into market trends, volatility, and investment opportunities. By understanding the purpose, construction, types, and significance of stock market indices, investors can make informed decisions, benchmark their portfolios, and navigate the complexities of the financial markets with confidence. Whether tracking broad market indices, sector indices, or specialized indices, investors can leverage these benchmarks to assess performance, manage risk, and capitalize on investment opportunities. As the financial markets continue to evolve, stock market indices will remain indispensable tools for investors seeking to achieve their investment objectives and build long-term wealth. Thank you so much for watching, and we'll catch you in the next video. Don't forget to like, comment, and subscribe.